So Affria Inc. just released earnings yesterday, and we're gonna go over that earnings report in this video. And because of this earnings report, as well as in recent downturn, the company has lost a price share of almost 30%. So we're gonna look at Affria Inc. earnings report, the press release, and we're gonna go over some of the key items that I personally like and don't like on this earnings report. But overall, I think this company presents a very good buying opportunity. But before we get started with the earnings release of Affria, if you're new to the channel, make sure to hit that subscribe button, as well as check out my free ebook in the description below. So here's the Affria earnings beats by Canadian by 1 penny and missed revenue. So the company released earnings for the first quarter of fiscal year 2021 on October 15th, yesterday. And you can see here revenue was up 15% year over year. However, earnings was down 0.02, but it did beat expectation by basically a penny. And the stock, if we look here at Google Finance, you can see here the stock has dropped around 27% since the October 12th, and then the release came in yesterday. And yesterday's dropped down by currently about 2.88%. So what we're going to do, we're going to go over the Affria earnings release or press release and look at some of the numbers here. First thing that sticks out, net cannabis revenue increased by 103% from prior year quarter. Adjusted earnings before interest, taxes, depreciation, and amortization from cannabis business of 10.4 million increased 11% from the prior quarter. So overall, I really like what I'm seeing here. If we look at what the CEO said, our strong first quarter results reflect the continued robust growth and development of Affria adult use cannabis brands in Canada. So I think the fact that there was a lockdown and you know, a lot of places, people working from home and such, I think this helped with the increase in these net revenue cannabis growth, because people, you know, were stuck home, bored. You know, so I think they were using more, they were smoking more there. And let's look at some of the key operation highlights. Record gross revenue for adult use cannabis of 69.6 million Canadian dollars in the first quarter, an increase by 23% from prior quarter, and the 6th consecutive quarter of growth. So that's very positive news there, some good news there. Adjusted EBITDA of 10 million in the first quarter, an increase of 17% from the prior quarter. And the first quarter with strong balance sheet and liquidity, including 400 million in cash and cash equivalents to fund planned Canadian and international growth. So that's very positive. We're going to look over the balance sheet, and the company actually has a very solid balance sheet. We'll look at that shortly. So for the 3 months ended in August 31st, 2020 versus August 31st, 2019, you can see here net revenue grew about 12%, 15%. So that's very positive there. Gross profit is high as well, an increase, very nice increase year over year. Adjusted EBITDA 10 million versus the 1 million from last year. So if we look here at the income statement, you can see cannabis revenue grew very nicely, almost over double, 100% increase from 2019 to 2020. You can see here they made 82 million versus 35 million. Distribution was down slightly from 95 to 82, but overall the company made net revenue of 149 million versus 126 million last year. You can see here gross profit also increased very nicely from 45 million to 75 million, another increase. So overall the company had a pretty good quarter. We'll look slightly on why the company share price dropped almost 28% in the past few days. And you can see here operating income, huge increase from 4 million to 20 million. That's like almost like 4 or 5 times increase, so that's very impressive there. However, they did have a net loss of 5 million versus 16 million of profit last year. And the biggest thing in net loss came in non-operating income expense. So there was a huge increase in expense here. And it says here 24. Let's look at that 24. So 24 in the notes is non-operating income. You can see here foreign exchange loss. They lost 20 million there, so that's what's the big huge hit, which is basically the exchange rate of from dollars to Canadian, or German to dollars or Canadian, things like that. So that's a huge loss there versus the prior year of 8 million. They lost 20 million. So that's the big hit of 17 million for the non-operating income. So you can see here the 17 here. This is what kind of makes me excited for this company. The cash and cash equivalents of 400 million versus 497 million. So it is a decrease. However, if we use this as a valuation, so if they have 400 million, let's say 400 million divided by the, let me do it again here, 400. So we have 400 million divided by the total outstanding shares, which is over here. Let me find that here. Diluted shares here, 287,504,789. Gives us a price to share rate earnings, or cash to share, price to share, which is $1.40. So the company is going for $4.66. So if you're, basically the floor for this company is $1.39, and it's not too far off what it currently is. So if we do 1.39, and we do divided by 466, so 4.66 divided by 1.39, that gives us a 3 times cash to earnings ratio, basically. So you're basically paying 3 times of what the current cash that the company has. So that's very attractive. That's very positive news. And the debt is very, very low here for this company. You can see here, currently their current assets, which is 12 months of assets, under 12 months, it didn't decrease. However, the decrease overall in assets only was 8 million, so that's very positive there. Liability also decreased from 170 million to 166 million. For current liabilities, total liabilities also decreased 660 million to 640 million, so it's a very nice decrease. So the balance sheet is very safe. As you can see here, they have more assets versus liabilities. So that's overall very, very positive news there. I like that. So they have a strong balance sheet. So overall, the company balance sheet and revenue growth does look very promising. If we look at the Morningstar, they actually give it a 5-star rating with a fair price of $11 versus yesterday's closing price of $4.80. And you see here the price to sale ratio at 3 ratio is very, very positive. A lot of times you see a lot of growth company with a higher price to sales ratio, about 6, 8, 10, 11. So at a 3, and this is from yesterday's closing price at $4.88. And you can see here is actually lower than that. So this price to sales ratio is actually maybe like a 2.8 or 2.9. Debt to equity ratio at 0.23, so it's very nice debt to equity ratio. The reason why they don't have interest coverage is because of the fact that they the net income was negative this quarter. But I'm not concerned of this because they have a lot of cash to burn, basically, as you saw earlier. Current ratio very positive, 5.37. You like to see this at a 2 or higher. So overall, the balance sheet looks good. If we look at the revenue annualized growth for the past 3 years, almost 200% revenue growth for the past 3 year annualized. So that's very positive. So overall, the company looks very attractive at current prices. There you have it. Those are my thoughts on this cannabis company, Affria. I think it presents a good buying opportunity because it dropped almost 30%. As you saw, the current cash to shareholder, cash to shareholder ratio is very attractive right now at $1.36 versus where the current price is at $4.66. So that's very positive news there. And cannabis is an industry that's going to continue to grow as more and more of these stores open up, as well as the U.S. market. Once it becomes more legalized in all the states. So if you're interested in a cannabis company, this is one that you should definitely consider purchasing. Personally, I'm not buying shares of this company, just for disclosure, because it doesn't pay dividends. I'm not at my goal yet of about 24 grand a year in dividend income. That's where I want to be first before I start venturing out in different different companies that don't pay dividends and growth companies. So I hope you enjoyed this video, and if you're new to the channel, make sure you hit that subscribe button and like this video if you enjoyed it, and check out my free ebook in the description below, and I'll see you guys in the next one.